Hello guys, welcome back to my channel. This is Sochi and you are welcome to Sochi FOREX. Now in today's video we want to look at candlestick analysis for entry and exit. Candlesticks analysis for entry and exit. Now, as a trader, it is very important that we understand some particular candlesticks formation. Now, it is not just about cramming the name that matters, but it is the ability to interpret each of the candlesticks that is the most important thing. And why are we saying this? It is important to know any of these things because candlesticks is the only way we can interpret the behavior of the market. So candlesticks is the accurate measure put in place for us to interpret the behavior of the market. It is via candlesticks we get to know who is in charge, who is dominating a market per time. And that is why each of the candlesticks is formed based on duration. So depending on the duration you are doing the analysis, the candlesticks communicate. So if we are to take our trade from a support zone, from a resistance zone, we need to know. For instance, from a resistance zone, you are expected to sell. Why? Because you are expecting that in every resistance zone, they are selling orders. And as such, you want to see selling orders coming into the particular market for you to determine that it is a resistant zone. And the same thing is applicable to a support zone. You need to buy from a support zone because you believe that they are buying orders in a support zone. So, and what confirms to you that they are buying orders in those zones is the candlestick formation. So, briefly, we want to look at those candlesticks and how we can analyze them in taking our entry and exit of the market. So the first thing that I want you to take note is that candlestick is a fight between buyers and sellers. Candlesticks is a fight between buyers and sellers. That is the first point I want you to note, which means that in every single candlesticks, anywhere you see a candlesticks, there is both buying pressure and selling pressure. In every candlesticks, it comprises of these two scenarios. Okay, the candlestick comprises of both buying pressure and at the same time a selling pressure. So every candlestick comprises of this scenario. That is the first thing I want you to take note of. Then number two is that in every candlesticks, it is either buyers win or sellers win or nobody wins. So in a candlesticks, there must be either a buyers win, sellers win, or at the end of the day, nobody wins. Okay, so that is one of the facts. The second thing I want you to take note of. The first, we say candlestick is a fight between buyers and sellers. And we said in this fight, at times nobody's win, and at times buyers wins, and at times sellers win. So let's try to illustrate this part. For example, this is how a chart open. Okay, this is a formation of a new chart. When a new hour, a new time frame is forming, this is how it is formed. Then you will realize that this chart that is formed like this, price will push to the downside, go up, push down, go up, push down, go up, push down, go up, push down, up, push down, up, push down, and then it will finally close at this level. So what happened? The candle open here and the candle closes here. So if this candle is open here and closes here, it simply means that sellers win, regardless of the color. Okay, let me make it red so that we assume that okay, sellers won because it's now a bearish candle. So the candle opens here. This is the open of the candle, and this is the close of the candle. So it means that it opened, buyers try to push the price up, sellers try to push it down. Buyers try to push it up, sellers try to push it down. Buyers try to push it up, sellers try to push it down. And then eventually it closes down here. So which means that sellers won, right? Let's proceed. So sellers won. Then in another scenario, you realize that the candle will form this way. That the candle will start forming this way, and then buyers will push the price up, sellers will push the price down. Buyers will push the price up, sellers will push the price down. Buyers will push the price up, sellers will push the price up, sellers will push the price down. The buyer will push the price up, and then finally the candle closes. By what? By buyers pushing it up, sellers pushing it down, buyers pushing it up, sellers pushing it down. So this particular candle open here and closes here. So who won? In this particular candle, buyers won. And in this particular candle, sellers won. So in every candlestick formation, it is a fight between the buyers and the sellers. And that is why in some of the candles, you realize that we are having something like a week. Some of those candles, that is what we have. So at this point, what it means is that this candle open here, right? This particular candle open at this point. And what happened? Buyers push the price up all the way to this point. And then sellers push the price down. Buyers push it up, sellers push it down. Buyers push it up, sellers push it down. Buyers push it up, sellers push it down. Buyers push it up, sellers. So they keep on pushing up and down. Then sellers push the price down to this level, and then buyers push it up, and the candle closes at this point. So who won? Still sellers won, right? Now there are other scenarios whereby you will have something like this. You have something like this. And then the candle will begin to form. You realize that it will open here. Then buyers will push it up, sellers will push it down. Buyers will push it all the way here, sellers will push it down. Then sellers will push it down, buyers will push it up, sellers will push it down, buyers will push it up, and buyers will push and push and push and push, and the candle will close here. So looking at this particular candle, it closes exactly where it opened. So it is a sign that nobody wants. And that is how we get the dojis we are having in the market. So these candlesticks patterns are behaviors. They are fights between the buyers and the seller. And in each of these fights, it is either buyers won or sellers won, or nobody wins. When nobody wins, it gives us a dojis without a body, and when it wins, it gives us something like this. Now, regardless of the color, so we get our pin bar when price open at this zone. Okay, and then suddenly sellers push the price down, buyers push it up. Sellers push the price down, buyers push it up. Sellers will push the price all to this way. Then buyers will begin to push and push and push and push and push until the price closes here. And automatically it becomes a pin bar. Why? Because there is a time sellers push the price all the way down, and then buyers push it back and close it as a pin bar or as a hammer. So it is very important that we understand this concept about candlestick formation. That's a fight between the buyers and the sellers, and in this fight it is either buyers won or sellers won, or nobody wins. Okay, so having established this fact, you now know that if a price is coming down, you can determine who won, and who won determines the pressure that is available in the market. So which means that if we are at a support zone, we are expected to see a candlestick whereby buyers win, and if we are in a support, in a resistance, we want to see a candlestick formation whereby sellers won. Alright, so now let's go to our chart, trying to illustrate what this scenario is all about. I don't intend this video to be long, so we are going to have a part 2 for this video. Please, I believe you are gaining value from this video. Do not forget to like, to share, and above all, subscribe to our channel. Support what we are doing, please. That is all you can do for us. Alright, this zone has been a level of resistance. Okay, this particular zone has been a resistance zone. Price has been retesting this zone for a while now, and so is our level of resistance. So at this resistance zone, we are expected that we will see a selling order from this resistance zone. This is our first point of rejection, another point of rejection. So when price approaches this resistance zone, we believe that we need a confirmation for us to make our sell entry, and this confirmation from this our level of resistance is based on a candlestick formation. Okay, it's based on a candlestick formation, and below it at this point as well is our support zone. Okay, resistance up, support down, and we have expected, because price has been testing these zones over time, so we've marked this zone as our level of support and resistance. You can see it from a higher time frame view. Okay, so let's go back to our 1 hour. So what do we do now? Looking at this critically, price got rejected, came to our support zone. So in this support zone, we are looking forward to a buy. And so what do we do for us to a buy? We want to identify the presence of buyers in the market. And then looking at this particular candle, this is a bearish candle, showing that the sellers are present in this market. This is another follow-up of a bearish candle, telling us that sellers are still in market, and this also is a bearish candle. But to reaching this support, in order for us to buy, we need a proof that actually buyers are in this market, and that is why in this candle there is a fight between, you can see the wick between the buyers and the sellers. So it opens here, buyers push the price up, sellers push it down, buyers push it up, and then buyers won. Okay, and here we have an engulfing candlestick in this zone of our support, bullish engulfing candlestick, and as such we see, despite the next formation of the candlesticks, buyers try to go up, it opens, buyers push it up, sellers push it down, they drag until sellers push this candlestick down. It closes down, but you will see that it did not close below the previous bullish candle. It did not engulf this particular bullish candle. You can see where it closes. So it still shows that buyers are a presence in this market, and you can see they follow the next candle, shows how powerful the buyers have come into this market. So you make your entry at this close of this candle, your stop loss is somewhere around this zone, and you can see how it plays out beautifully. Okay, now looking at this resistance zone, you can see here that price come to this resistance zone. We need to get a proof that there is a presence of seller in this market, and as such, look at what happened on this particular candle. Price went open, buyers push it to the resistance zone, sellers push it down, so it closes with a rejection. But at the next opening of the candle, buyers push the price up, it closes. Then the third candle, you can see that buyers again try to push the price down, and then sellers push it down. So what are we doing? We are doing candle by candlesticks analysis. We are analyzing each of the candles. And now look at what happened on this. And on this one, it opened, buyers push it up, sellers push it down, buyers push it up, sellers push it down, and unfortunately sellers won. It closes as a pin bar. So we have our entry here, our stop loss 15 pips above the pin bar, and we are moving to the downside. Please, I don't intend this particular video to be long, so please, all I want you to do is watch this video over and over again, and I believe you are getting value. Please do not forget to like, share, and subscribe. Turn on the notification bell so you'll be the first to get notified when we publish the next video. In the next video, we'll continue from where we stop, candle by candlestick analysis of after making your entry from this zone. How do you hold on to your trade based on this analysis? Up to then, see you in the subsequent video. Cheers.